Isn't it something how just one earnings call can set off so much discussion, so many different takes?
It really is. And look, we know you're busy.
Yeah, exactly. Nobody has time to wade through, pages and pages of dense reports.
Right. So think of this as us doing the heavy lifting for you. We're pulling out the essentials from Palantir's Q1 2025 earnings.
Not just the jargon, but what it actually means. We've looked at the call, the analyst takes, management's answers.
The whole picture. Our mission really is to get you those key insights, maybe even the ones that aren't immediately obvious.
Okay, let's dive in then. The big number everyone looks at first, revenue. $884 million. That's up 39% year over year.
Yeah, solid beat, about 2.5% above what analysts expected. Strong growth, definitely.
But a couple other numbers really jumped out, I thought. U.S. commercial revenue,
Oh, wow.
up 71%.
Incredible, isn't it? And that pushes them past $1 billion annual run rate just from that segment.
That feels like a really big milestone for a company once seen mostly as government-focused.
Exactly. It suggests a huge shift, right? A sign they're making serious inroads in the private sector. And you still see the government side holding strong, too. U.S. government revenue up 35%.
Driven by DoD and NATO stuff, I gather.
Yeah, those contracts continue to be a bedrock for them. So you've got kind of these two powerful engines driving growth now.
And it's not just top-line growth, is it? They seem to be getting, well, much more efficient, too. Adjusted operating margin hit 44%.
Which is a huge jump, 800 basis points year over year.
8 percentage points, basically. That's substantial improvement.
It really is. It tells you they're scaling effectively,
Yeah.
getting more profitable as they grow. And linked to that, net dollar retention, 124%.
Okay, let's break that down. For someone not living in the SaaS world daily, what does 124% NDR actually signal?
Right. Think of it like this. For every dollar Palantir made from their existing customers last year, they're making $1.24 this year.
Ah, okay. So existing customers aren't just staying, they're spending significantly more. That's a good sign.
It's a very good sign. Shows they're finding more value, expanding their use of the platform, customer satisfaction, basically. And it ticked up sequentially, too, by 400 basis points.
Nice. And then there's this rule of 40 thing. They hit 83, which sounds, well, extremely good. Best in class, they said.
It is. The rule of 40, it's a quick check. Growth rate plus profit margin should ideally be over 40.
And they're at 83.
Yeah, 83. So that shows a really healthy balance between growing fast and being profitable, way above the benchmark.
Okay, so the headline numbers look pretty great. But these calls, they're never just sunshine and rainbows, right? There was some debate, some pushback from analysts.
Oh, absolutely. There always is. RBC, for instance, they noted that the commercial revenue, while strong, actually missed the consensus estimate by around $6 million.
Oh, okay. So beneath the big percentage jump, a slight miss versus expectations?
Exactly. And RBC questioned if that growth, particularly the part driven by their AI platform, AIP, is really sustainable at this pace. Like, is it just a temporary surge?
Interesting. And what was management's comeback on that? I imagine they pushed back hard.
They did. They pointed straight to the total contract value, the TCV, booked in U.S. commercial.
Right, the future business.
Yes. And that number was massive. $810 million in U.S. commercial TCV, up 183% year over year.
Wow. 183%.
Yeah. So their argument was basically, look at the pipeline, look at the deals we closed. That's the real indicator of demand, not a tiny quarterly revenue variance. They also mentioned sales cycles are getting shorter, deals closing faster.
So management says future indicators are incredibly strong, even if the current quarter's commercial revenue was slightly under some specific forecasts. Make sense? What about the valuation? That always comes up with Palantir.
Always. Trading around, what, 80 times estimated 2025 sales? That's a rich valuation.
Definitely premium territory.
Yep. And analysts, you saw RBC and Mizuho specifically mention this as a reason for maybe holding back a bit, keeping more cautious ratings. Can the growth justify that multiple? That's the billion-dollar question, or maybe the 80-time sales question.
Right. And management's defense on the valuation front.
They focused on the unit economics, the profitability per customer, and the scalability. They kept hammering that 44% operating margin, and specifically how they achieved that margin expansion without increasing headcount.
Doing more with the same number of people. Efficiency.
Exactly. Their point is, we can grow revenue significantly without proportional increases in costs, which supports a higher valuation based on future profit potential.
Okay, clear battle lines drawn there between some analysts' caution and management's confidence. Let's shift gears now to those non-obvious insights you pulled out. The first one, AI demand outpacing AI supply. What do you mean by that?
So this was a core theme from Palantir. Their argument is essentially that while getting access to AI models is becoming easier, like the performance of different large language models is getting pretty
Right.
similar.
It feels like there's a new model every week.
Exactly. But the results businesses are getting from using AI, that's not converging. There's a big gap between having an AI model and actually making it work effectively to, improve the business.
So the bottleneck isn't the AI model itself. It's making it useful in the real world.
Precisely. And that's where Palantir sees its strength. They argue their ontology, that data integration layer combined with their AIP agent framework, that's the crucial bit. That's what lets companies actually deploy AI and get tangible outcomes, not just run experiments.
The ontology connects all the disparate data sources, right? Creates a kind of map.
You got it. It creates that unified view, which is essential for AI to understand the context and make smart decisions. They believe that's the real differentiator now, not just the underlying AI tech itself.
And you had some concrete examples of this making a difference.
Yeah, really striking ones. AIG, the insurance giant, they're using Palantir AI to take underwriting processes that used to take weeks and do them in hours.
Weeks to hours, that's not small.
Not at all. And then Walgreens. Get this. Automating 384 billion decisions daily across their 4,000 stores.
Billion with the B.
Billion with a B daily. The scale is just immense. It shows this isn't just theory, it's deployed and operating at a massive scale.
Okay, those examples really drive home the point about tangible outcomes. Insight number 2, U.S. commercial strength being underappreciated. Why underappreciated if the growth number was 71%?
Well, because the market seemed to fixate on that slight miss versus the consensus revenue number we mentioned earlier.
Right, the $6 million deficit.
Yeah. But management would argue, and I think there's a strong case, that looking at the $810 million in new U.S. commercial TCV, up 183%, that's a much more powerful signal about the future.
Because that's locked in future revenue.
Exactly. It shows explosive demand and future growth that isn't fully reflected in the current quarter's revenue number alone. The momentum seems much stronger than maybe perceived at first glance.
And you had that healthcare example illustrating the speed, right?
Yeah. Oh, yeah, that was fascinating. A healthcare company went from an initial boot camp, basically a short intensive trial.
Like a test drive.
Right. From that boot camp to signing a 5-year, $26 million contract in less than 5 weeks.
5 weeks. From trial to a major deal.
Yep. That kind of velocity is pretty rare in enterprise sales. It suggests their platform is resonating incredibly quickly and effectively in that commercial space.
Okay, point taken. The underlying commercial momentum looks really strong. Your third insight was about the defense AI stack becoming irreplaceable. That sounds significant.
It does, and I think it is. This isn't just about winning contracts anymore. Palantir's work, particularly with the Maven smart system for the U.S. military and potentially NATO.
Maven, right. Heard that name.
It's becoming more like fundamental AI infrastructure for decision-making. It's getting deeply woven into how these defense organizations operate.
So it's not just a tool they use, it's becoming part of the core system.
That's the argument. And the evidence is pretty compelling. You now have combatant commanders, top military leaders, specifically referencing Maven by name in their official posture hearings to Congress.
They're naming the software in congressional testimony.
Yes. When your system reaches that level of recognition and integration where commanders see it as a core capability they need to report on, that suggests it's becoming incredibly sticky and strategically vital, much harder to just rip out and replace.
That definitely signals a deep level of entrenchment. Okay, let's zoom out a bit. How does Palantir stack up against the competition in this AI space?
Good question. If you put Palantir's focus government, AI infrastructure, ontology, AI agents side by side with others.
It's like Snowflake or Databricks.
Right. Snowflake is obviously huge in data warehousing, very scalable. They partner for LLMs, but maybe have less native AI agent capability compared to Palantir's focus.
Okay, and Databricks.
Databricks is really strong on the data science and ML side, great developer tools, unified platform, but perhaps less focused on those huge government deals or the very complex, large enterprise side where Palantir often plays.
What about C3.ai? They're often mentioned.
C3.ai focuses more on pre-built, vertical-specific AI apps, predictive models for certain industries, which can be good but maybe less flexible than Palantir's platform approach, and there have been some questions around adoption rates historically.
So putting it all together, your verdict.
Well, I think Palantir's specific combination, the AI agents, the ontology, that infrastructure stickiness, especially in defense and regulated industries, It carves out a pretty unique and strategic position for them. They're aiming to be that foundational layer.
Okay, a distinct strategy. Now, the question on many listeners' minds, I'm sure, the investment angle.
Hmm.
Buy, sell, or hold. How do you see it across different time frames?
All right, let's try to break it down. Long term, thinking maybe 1 to 3 years out, I lean towards BUY.
Why the conviction there?
You look at that deep defense integration, the maturing AIP platform, the really strong free cash flow margins, 42% is impressive, and that huge U.S. commercial TCV growth we talked about, the 127%, that points to future revenue. Plus, the whole AI adoption wave is still pretty early, right?
Seems like it.
So there's a plausible case they become a sort of OS for AI in key sectors. That's the long-term bull case.
Makes sense. What about the medium term, say the next 3 to 12 months?
Midterm, I'd probably say hull die, but maybe with an upside bias.
Okay, more cautious. What are the key things to watch?
The big one is, can that U.S. commercial momentum, that 70% plus growth, can it keep going? That's crucial. And also, will their international business pick up? It's lagged a bit behind the U.S.
Any potential catalysts that could shift that view?
Yeah, if we see more big companies publicly converting to AIP, or if they provide more clarity on how those big NATO contracts are scaling up,
Yeah,
that could definitely provide a boost and change the sentiment.
got it. And finally, the near term. Next 1 to 3 months. We saw the stock drop after earnings.
Yeah, near term feels like a volatile hold.
Volatile because...
Because of that valuation risk we discussed, the stock dropped about 8% post-earnings, largely on those valuation concerns and the perception of commercial softness, even if management disputes it.
So the high multiple means high expectations.
Exactly. With an 80x estimated sales multiple, there's just no room for error baked into the price. Any whiff of bad news or slowing growth, even perceived slowing, could easily trigger more selling pressure in the short term.
So summing it up, strong fundamentals, huge long-term potential, but carrying a price tag that demands near-perfect execution, especially in the near term. Sounds like a bit of a tightrope.
That's a pretty good way to put it. You know, what's really interesting is watching Palantir kind of defy easy categorization now.
How so?
Well, are they a government contractor, a SaaS company, an AI pure play? They're sort of blending all of those. They're really becoming this foundational AI infrastructure provider for major global institutions.
And you see that tension playing out in the market reaction. Strong numbers versus valuation worries.
Absolutely. The metrics are solid. Management sounds incredibly confident, almost bullish. But the market is still grappling with how to value this unique high-growth company in the current environment. It's a fascinating dynamic to watch.
So as we wrap up this deep dive, what's the final thought you want to leave with everyone listening?
I guess it comes down to this. If you believe AI is truly going to reshape industries, reshape how organizations function, then you really need to pay attention to infrastructure for that transformation.
The picks and shovels of the AI gold rush, maybe.
Kind of, yeah, but maybe even more fundamental than that. Palantir, with its government roots, its growing commercial presence, and that core AI platform, they are making a serious play to be one of the essential platforms in that AI-powered future.
Yeah.
Really makes you consider, what role will companies like this play 5, 10 years down the line?